What is a HELOC? Chad Helmcamp here with BWC Lending. Want to provide a little more detail on what a HELOC is. A HELOC is short for home equity line of credit. It is a home equity loan. It works as a line of credit against your home, and it's a fantastic product. In the market that we're in today, where interest rates are substantially higher than they were a year ago, most people who reach out to me looking for home equity, I end up recommending a home equity line of credit. A home equity line of credit is a second lien, so in other words, your mortgage will stay in place and your home equity loan will be behind it in second lien position. And in the state of Texas, you can borrow up to 80% of your home's value, okay? So let's say, for example, that your house is, just keep math simple, let's say your house is worth $100,000 and you owe $50,000 on your mortgage. Well, then that means you could take out a home equity line of credit for $30,000. So the 50 plus the 30 is $80,000 total, 80% of your home's value. The home equity line of credit is really great because it's, number one, it's super cost effective. It's not very expensive to obtain. Typically, all you have to do is order an appraisal to show how much equity you have in the home. Number two, there are no closing costs, okay? And so that's the nice part. But let's say you take out that $30,000 line of credit, but you only need 5. Well, you can only use the 5 and you'll only pay interest on that $5,000 that you draw, but the $30,000 will remain there. Home equity line of credits are typically designed over a period of time like 20 years, and there's usually a draw period anywhere from 5 to 10 years. The draw period is the period of time in which you can access that $30,000. So let's say you use 5 today and you use 10 next year and then you use 15 the year after that. Well, over time, obviously that balance is building, and so now you're paying more and more interest over time. So that's the nice part. At the end of that 5 or 10 year period, whatever's left on the line of credit becomes a fully amortized payment, meaning you will now be paying principal each month for the remaining term. I think I failed to mention that. In that draw period, you're only paying interest. So it's an interest-only payment, which means your payment is really affordable. And then at the end of that draw period is when you have a fully amortized payment. I think it's a fantastic product. The only real concern about the home equity line of credit in today's environment is we are in a rising interest rate environment. And popular to what a lot of people believe, when the Fed raises their rates, it doesn't automatically increase mortgage rates, but it does automatically increase home equity lines of credit, because that is what the home equity line of credit is tied to. It's tied to the prime interest rate. So every time the Fed raises their short-term rate, you're going to see your home equity line of credit interest rate increase as well. Right now, the expectation is that by the end of this year, right now we're around 1.75% on the Fed funds rate, and by the end of this year, they expect that to be between 3 and 4%. So we're going to see a pretty significant increase in those home equity line of credit rates this year. Hopefully, as many people believe, that sometime in the next 24 to 36 months, we'll start to see those rates maybe come down a little bit. But hopefully that helps. It's a lot of information. If you've got any other questions or concerns, feel free to give us a call or subscribe below and follow us in the future. Take care. Bye.